We start off with today's market rally. The Dow surging nearly 300 points as better than expected earnings from JP Morgan and strong data out of China give investors a sense of euphoria. And here are the words that helped spark today's rally from JP Morgan CEO Jamie Dimon.
If you look at, you look at the American economy, the consumer's in good shape, the balance sheet's in good shape, people going back to the workforce, companies have plenty of capital expenditures are still up year over year. There's no law that says it has to stop. We do make a list and look at all the other things, geopolitical issues, lower liquidity. So there may be a confluence of events that somehow, causes a recession, but it may not be in 2019, 2020, 2021.
And just like that, everything is awesome again. The S&P 500 about 1% away from all-time highs as we head into earnings season, the depths of it, where expectations are low, the Fed's on hold, even as the economy remains in good shape. So is everything really awesome again? What do you buy now, Guy?
That's my favorite. It's become my favorite.
It's your ringtone, I thought.
And it's on my Spotify playlist that I created myself.
Who sings it?
Excuse me?
Who sings it?
The one you saw last night, Melissa Etheridge.
Yeah.
Anyway.
Tegan and Sarah.
I don't think everything's awesome, but to Jamie Dimon's credit, I mean, he didn't say this just today. He's been saying this for quite some time, and quite frankly, he's been right. The banks obviously have been doing well. Kudos to everybody on this. That's probably but myself. I would submit that, Jamie Dimon's JP Morgan, $57.50 tangible book. You're getting close to, at current price, almost 2 times price to tangible book. I mean, that's sort of the deep end of the pool. With that said, what can you buy? Well, I still think you can buy some of these under the radar retail type of stocks. Dollar Gen, which didn't do anything today, but that had a great bounce off their earnings release. And I still think big cap pharma is the place to be, despite the fact that over the last week and a half, they've sold off.
Is everything awesome?
Everything's okay. Right? Okay. There's some good China data.
I think a good song, too.
But I think, JP Morgan, that was great. But I think what really set up for it to be great was they really downplayed that quarter in their 10K, right? They really talked the first quarter down. So it's not shocking that it's better because things sort of improved as the quarter went along. I mean, they had talked about high teens down for trading revenue. That came in much better. Net interest income was better. Expenses were in line. So there's a lot of good things to like. Probably shouldn't have been at that price. So I'm very happy that it's trading up, but I think there's still room to run.
I don't think anything that happened today is sustainable. I don't think China is sustainable. I don't think JP Morgan is sustainable. I don't think banks are sustainable.
So everything is not awesome.
But JP Morgan was my final trade yesterday because I think it's about positioning. I think it's about positioning. I think it's about emerging markets. I think it's about the trade deal. I think it's about a ton of things that are going on. I just don't think that they're sustainable, but I do believe that you can still buy energy and financials until this plays out.
So look, everything is awesome. One of the problems is that everything actually seems awesome to everybody else as well. So look at the VIX. The thing that worries me is 1220 on the VIX, 12.2. That means everything is really awesome. There's no risk. There's nothing. There's no Fed. Dollar's weaker. You have decent growth out of the banks, record profits. And by the way, we also now have an energy sector, which indicates M&A is more is coming. And that means maybe more is coming for every other sector. So why isn't everything really, really awesome? Because I think that the bullishness amongst investors right now is probably getting a little bit euphoric. And if you look at relative strength indicators, if you look at these bull bear indicators, again, we have a spread of almost 40 now on bull bear. To put that into context, this is kind of through where we were in October in terms of bullishness. So what I still think, today's bank earnings were exactly what, dare I say, I expect for the rest of the earnings period. There are a lot of people that don't think you're going to get anything. Mm-hmm. And in fact, you've got CEOs that are willing to get out there and talk about their business.
Both these guys were mentioning positioning going into this season. I just wonder, Guy, we got the read from the banks strong. We also got the negatives out of Wells Fargo. If you really wanted to pick apart, they were saying that the economic indicators they see foreshadow an uptick in unemployment, and that's why they increased their provisions. And the expectations for banks in particular were so low going into the season. So how are we setting up for the rest, the bulk of the markets, the areas of the markets like the industrials, for instance?
Well, that's why
looking at
I think Boeing and Caterpillar are obviously two extremely different stories, but I think they're both very interesting. And I think they report next week, I think on the 24th. So if I'm looking for anything, it's Boeing and Caterpillar. Caterpillar, the poster child for global growth, and obviously what's going on with Boeing over the last couple of weeks. Again, I think earnings are fine. I don't think they're overwhelmingly fantastic. I just think, to Tim's point, the market's gotten so complacent. I mean, really, what's the difference between what happened towards the beginning to the end of December as opposed to what we're seeing now? You just had huge negative sentiment. Now you're just having the exact same thing the other way. The fact that the VIX closed at 12 today, to me,
and the bar is set so low. Everyone was waiting for this earnings recession. Mm-hmm. So if you're going to have the earnings recession, then people were looking at going negative. And I think people look at an earnings recession as we're going negative on earnings, not that we're going to be slightly lower or their own EPS is only going to be up X percentage. So I think we got a little overly negative, to Guy's point.
You sound kind of bullish then.
I'm bullish enough so that the laggards can catch up a bit here. Look at what happened today. You had software stocks sell off. You had technology. You had biotech sell off. But what ran? Financials and energy. The laggards. That, to me, is not a lot of conviction.
And industrials, though.
It's about a catch-up.
Industrials, right? I mean, we've seen, FedEx is well beyond where it was when they missed, and it traded down. It's well higher than that now. So I think the bar was low, but as the quarter went on, the economy improved, confidence improved. And so to me, it's not really so much what are they announcing now, it's what's the outlook. And if we have a trade deal, I think that is that can be the ballast to hold this.
To Guy's point, though, in terms of what changed from the beginning of December to the end of December, the Fed changed.
Of course,
right?
No, I know that was the
gone.
And then in January, throughout this quarter, we had confirmation that the Fed is really on the sidelines. And so are we complacent, but for good reason, because the Fed is completely out of the picture and rates are so low?
Yes. I mean, look, I don't think you fight central banks. It's the most important factor that markets are facing. And if rates stay low and central banks continue to prime the pump, there's plenty to go. Remember, also, we're coming back into the market for a lot of these central banks. PBOC is not done. I think China's got a lot more to do. And I think with a weaker dollar, you've got a lot of room for these resource trades that actually have underperformed in the last week. In fact, we had a little bit of a growth downward scare. Copper was down 2% a couple days ago. Freeport, all the steels. I bought some calls in U.S. Steel, a position I actually have slightly long. And I added some calls to it because this, to me, is a time when I think you're getting reaffirmation of global growth. And the export numbers out of China may be a lumpy, volatile data series, but you can't tell me they're not going to continue to be pushing it here. And we're starting to get, I know you love this term, Guy, some green shoots coming out of the European Union. If you look at industrial production this week, it was a lot better.
Do you hate that expression?
I don't like green shoots. I don't like
Goldilocks.
Goldilocks.
Yeah.
It makes me crazy.
Hump day.
Obviously, Hump day is
and Turkey Day.
Turkey Day. Yeah.
I mean, we should actually do a list online.
I think
I'm sure many people would be fascinated
Save it for
by
Twitter.
it.
Like 10. Maybe save it for the Twitter.
Do you see green shoots coming out of Europe?
Tim's the European expert. I mean, I think the level, it's getting less bad, right? So, I mean, if that's green shoots, then that's a good thing. I mean, sometimes, and you make the point all the time, sometimes it's the best time to be in stocks when things are getting less bad, not necessarily turning the corner.
I don't know if they're. I don't know
if the DAX. It's taken forever for this thing to break out. It's now well above the 200-day, and I would watch the DAX and EM because until they break down, they've been moving higher. They've been making.
So I'm not sure it's getting less bad. Maybe you have one off here and there as far as data points, but I don't know what the ECB is going to do to solve the problems. I think that they're doubting even their own resolve with any type of stimulus that they can offer. You have all these markets that they've had 3 or 4 or 5 years of stimulus. Then they backed off. Now they're going to prime the pumps. A lot of these markets are at the same exact spot where we started this massive stimulus.
I get that, and all I would say is we're now 10 years into a post-crisis environment where we've never really had substantial growth take hold. In fact, when we started to get it last year with global synchronized, we threw trade tariffs in the middle of it and botched it all down. So what's allowed markets to have the greatest bull market of all time? Central banks. Until this changes, I don't know why you even fight it. I really don't. I mean, it doesn't mean that we shouldn't be cautious of the risks, but this has been a painful move higher by this market for a lot of people.
I don't want to get too options action-y ahead of options action. But Karen, you're known to hedge your position, and so I'm wondering, with the VIX at 12, are you doing that right now?
I haven't yet, but I have to look, right? If I've done it in the low teens before, I have to do it here because I want to stay long what I own. And so to be able to sleep at night, I think you got to buy protection here. I hope that it goes to zero.
I think if you look at the S&P out to September and summer, there's a lot of volatility ahead. There's no reason not to actually take an opportunity of the VIX at 12.
It's interesting, and quickly. So Tim said something, and he's right. But my pushback would be, I think we've learned central banks can never normalize. they're not allowed to because the markets won't allow them to. If that's the case, can markets go up in perpetuity? Because that's effectively the calculus, and I can't believe that can take.
You don't think that if the economic data were hands down undeniably strong, that the markets would be able to
talks about this
normalize?
being the greatest economy in the history of the. I mean, not my words. He says it as
Powell
well.
also said that he was going to raise rates. There was a 180 that was pulled, and that's what confused the overall markets. Powell had a different stance on the overall markets. He thought that the markets were on a much stronger footing, or else if he didn't.
The markets or the economy?
The economy, because that's what he's basing it on. So if he did not feel that the economy was on a strong footing, then he should have never spoken the way he did in early October.
I think he misspoke. I also think that they were surprised at how inflation has been just non-existent. That's the second
I have a
part
problem
of
with
their
that, too,
Hasn't
though.
changed.
I don't think you're telling me that there's no inflation, but I'm going to tell you we had a lot of PPI around the world again out this week. We had it in the United States. We're like 20 months above 2% on core PPI. We have inflation, okay? The measurement of inflation is totally screwed up because the bottom line is it's feeding straight through to the economy. Higher wages, we're hearing it about at restaurant prices. We're seeing it in the form of everything really other than buying, T-shirts at the Gap.
So then what do you do with rates,
higher.
though? What do you do with rates? Is he wrong to keep rates where they're at now?
I wouldn't do anything with rates right now. Look, we don't have the U.S. economy printing anywhere near recession. We're at 2% here. I would let it ride.